I want to do a quick review of Kickoff. Is this instant approval credit builder worth it? Welcome back, folks, to another edition of the Awesome Sweaty Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I'm going to do an in-depth Kickoff review. Let's first start with the overview of Kickoff. Everybody knows that the hardest part about building a credit history is getting access to credit in the first place, right? So if becoming an authorized user on someone else's credit card is not an option for you, or let's say you cannot afford the deposit on a secured card, Kickoff offers a real cheap and simple way to build credit. And this company is based in San Francisco, and what they do is they are an online lender. So they give you access to a $500 revolving line of credit that you can use to build a credit history. It's really like a credit card, but without interest or fees. And you can use the line of credit to make purchases only on Kickoff's online store. So that's the only drawback here. And the cool thing here is that the company reports payments to 2 credit bureaus, and users get access to Vantage Score credit scores to track their progress. So this is very important. And one thing we also love in the Kickoff offer is that there is no credit check involved and no need to link a bank account. Okay. And according to Cynthia Chan in one interview a few months ago, she said that the credit building products will always be interest-free and fee-free. Okay. And one thing that you have to also understand is that even if you already have credit but need to build it after some missteps in the past, Kickoff is one of several options you can explore. So we're just putting on the screen right now the whole idea you need to have when thinking about Kickoff is that you receive a line of credit of $500. The APR is 0% and minimum credit score, none. If you think about it, this is another, it's kind of similar. The Kickoff business model is similar to buy now, pay later, all the offers that we have on the market from Affirm or Klarna, really. So this is the overview. This is what you need to think about. Now let's talk about how a Kickoff credit line works. All right, so Kickoff will offer you a $500 revolving line of credits, and this is applicable to all applicants. There is no credit check involved, and $500 is the only amount you can get. No more, no less. There are some limitations though. You cannot access the money through a check or other method. You can only use the credit limits to make purchases on Kickoff's online store. So you want to think of it as a payment option at checkout. And the thing is that the Kickoff store contains ebooks on personal finance, wellness, and other topics for purchase. And Kickoff's back in the days, they used to offer a $12 credit builder loan that you paid back in 12 monthly installments of $1 each. And the loan is no longer available. The last time we checked, the loan is no longer available to new applicants. And existing customers with an outstanding loan have 3 choices. They can continue their monthly payments, they can pay the loan off and switch to the revolving line of credit, or they can keep the loan and add the line of credit. And the way the whole thing works is that the revolving line of credit shows up like a credit card account on your credit reports, and payments are reported to Experian and Equifax credit bureaus, not TransUnion. All right, so that helps build your credit history, and your scores are calculated from information in your credit reports. And so people who chose the loan option and were new to credit typically would establish a Vantage score 3.0 within 30 days and a FICO score within six months, according to the company. And based on our research, we haven't seen data for new credit users of the line of credit. So one thing you have to keep in mind is that the reason why the Kickoff service is pretty cool is that the most important factors affecting your score are making on-time payments, followed by how much of your revolving credit limits you use, known as your CUR, right? Your credit utilization ratio. So Kickoff basically is part of the new wave of fintech companies that are teaching people to keep an eye on the credit utilization ratio through their online accounts. And payments, of course, with Kickoff, payments is due every month, and you can make payments using a debit or credit card. So Kickoff sends you a reminder when payments is due. Okay. And another cool thing here is that Kickoff also gives borrowers access to a free Vantage score from Equifax to track their progress. You can also use there are other services out there. You can also use NerdWallet, for example. We have also Nav is another good one. So you have choices there. But yes, this is how a Kickoff credit line works. So what about the Kickoff fees and penalties? Let's just talk about that. Unlike a traditional credit card, Kickoff's line of credit does not carry any interest. If you don't pay off the monthly balance or pay just the minimum, you will not accrue interest. As with any other form of credit, paying late or missing a payment can hurt your scores, right? Normally, paying a bill 30 or more days late can seriously damage your credit, and you may have to pay a late fee to your lender. Kickoff does not currently charge a late fee, but if someone becomes delinquent on their payments, the line of credit can be frozen. You only pay $2 a month. And according to the company, and we reached out to them, according to the company, they might display loan products offered by their partners in the future. And this is how they're going to monetize the whole their business model here, because they will be earning commission. They will be earning money from commissions. Think of it as affiliate marketing, really. Okay, so this is something you have to think about. And how to apply for a Kickoff credit line. Very simple, folks. We're showing you right now on the screen the sign up page, right? So you can apply on Kickoff's website by providing personal details such as your name, phone number, address, and your social security number. There is no credit check involved, and you don't need to provide access to your bank information. The only reason why they need your social is because they are going to report your payment history to Experian and Equifax. All right. So once your identity has been verified and you are approved, you can review your credit limit balance, track your credit score, utilization, and payment date through your online Kickoff account, so through your Kickoff online account. So those are the great. This is great. And now, of course, it's all beautiful. There are a lot of pros to the Kickoff business model, but there are also some downsides. There are very few drawbacks to Kickoff. It's free, it's easy, and it seems to work. The only thing we don't really like is that Kickoff only reports to TransUnion if you're new to credit. If they always reported to TransUnion, that would be ideal, right? However, in life, we often can't get everything we want. So overall, Kickoff offers many excellent benefits. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Studio Kiwi Show. Today we are reviewing Kickoff, and I've given you an overview of Kickoff, how it works, the fees and penalties, and how to apply for a Kickoff credit line. Now let's talk about alternative to Kickoff. When it comes to credit builder accounts, Kickoff isn't the only game in town. You have Self Inc. and Credit Strong are both competitors, and so let's just take a look at how each of these products works. First, let's start with Self Inc. Now, Self Inc., formerly Self Lender, offers an excellent credit builder product, and so they set aside money, a minimum of $600 in a savings account, which you initially don't have access to. So you make payments, typically over a period of 24 months, towards what was set aside in the account, and payments will be for $25 a month. And so these payments are reported to the credit bureaus every single month. So the account is listed as a loan. So assuming you pay on time, your credit score will benefit. So that's pretty cool. And at the end of the 24 months, the money you paid is returned to you minus interest and fees. So typically you'll get back around $520. So you gave $600, you'll get back $520 after paying $600. So you have so you will lose. I mean, Self Inc. will make $80 on on the deal. And Self Inc. does have two notable advantages over Kickoff. So Self Inc. offers a credit card. So if you've made at least, let's say, $100 in payments towards Self, the credit card is with Visa and will report spending and payments to the credit bureaus every single month. And so that's pretty cool. And so if you're new to credit or struggling with damaged credit, a card with Visa might be an excellent option for you. You can also think about Credit Strong. This is another alternative. And Credit Strong is in many ways quite similar to the credit builder products offered by Self Inc. And Credit Strong has two credit builder products. So one charges $15 a month and offers a $1,000 account which appears on your credit reports. And the other account is for $30 a month, and it provides a $2,500 account. So both of these accounts offer terms of up to 10 years, and they charge interest, although the rates seem to be lower than Self Inc. And Credit Strong reports your payment history to all three credit bureaus. And Credit Strong is cheaper than Self Inc. and has somewhat lower interest rates. And also, since Credit Strong offers loan terms of up to 10 years, it allows you to build on-timer payments for a longer period of time, right? And like Kickoff, Credit Strong does not offer a credit card, which is a notable advantage of Self Inc. Of course, Kickoff does not charge any interest, which is perhaps its biggest draw, really, as compared to Credit Strong or Self Inc. So as always, there are trade-offs in life, right? So speaking of Self Inc. and Kickoff, let's just dig a little deeper here. I want to do a closer compare and contrast between Kickoff and Self. So we're putting something on the screen right now. You can see we have a comparative table. And I mean, Self is a lender that offers credit builder loans as well as a secured credit card to help people establish credit. Self is available in all 50 states. Kickoff does not lend in Delaware, Indiana, Nevada, North Dakota, or Rhode Island. Self is not free. You have to pay an administrative fee for its credit builder loan, as well as finance charges. And Self offers loans starting at $600 and going up to $1,800. So look at the screen right now. We have the pros and cons. Not the pros and cons. We have a comparative table here, Kickoff, on the left side and Self. So for Kickoff, you have a line of credit amount $500. For Self, you have a loan amount ranging from $600 to $1,800. The cost is free for Kickoff. For Self, you can pay. You have to pay APR, but also $9 administrative fee. There is no credit check for both products, and Kickoff will report to Experian and Equifax, whereas Self Inc. will report to all three credit bureaus. The term is revolving monthly for Kickoff, and for Self, the loan term is 1 to 2 years. And Kickoff is available in 45 states, whereas Self is available in all 50 states. Okay, unlike Kickoff, you don't have access to the full amount immediately when you go with Self. Instead, Self places the money in a certificate of deposit account and releases to you when you finish making monthly payments for the loan term, and you can use the loan to establish credit and build savings at the same time. And folks, there are other ways to build credit. You can become an authorized user. Think about it. If you're not interested in a credit builder, you can become an authorized user. If you have a family member or friend with a high credit score and long credit history, ask them to add you as an authorized user on their credit card. You can also get a secured credit card, because this is the kind of card that is backed by an upfront cash deposit. You can also ask someone to co-sign a loan for you. So if you can get a loan or a regular credit card using a cosigner, make sure that you and the cosigner understand that the cosigner owes the full amount if you don't pay. And you can also get credit for paying utilities or rent. You can explore using services like Experian Post or a rent reporting company to get your bills counted towards your score. This could be a good possibility too. And I also want to talk about how Kickoff can benefit your credit score. Even though Kickoff only reports to Experian and Equifax, it's still a great deal. Essentially, what Kickoff is doing is that they're placing a loan on your credit reports in the amount of $500. Remember, they gave you $500, which you are now repaying every single month. Most credit scoring decisions are made with the use of the FICO credit scoring formula. So whether you are applying for an apartment rental, mortgage, auto loan, or credit card, there is a good chance your FICO score will be used. So for this reason, it's quintessential, folks, to understand how FICO scoring works. And the thing here is that the biggest factor in calculating your FICO score is your payment history. That's really, really important. That's the number one. So whether you pay your credit accounts on time, and payment history counts for about 35% of your FICO score. That's huge, right? That's more than 1/3 of your FICO score, folks. So by paying your Kickoff accounts on or before the due date every single month, you are adding more on-time payments to your credit reports. And consequently, this allows you to enjoy a stronger payment history, which further boosts your FICO score. And Kickoff also helps your mix of credit. So if you think about all the components, all the things that make up a credit score, and we have covered this topic on other shows, you would remember that 15% of your FICO score comes from your mix of credit. So what that means is that having different types of credit accounts is better for your FICO score. So if you have a loan and a credit card, that's better than just having a credit card. And Kickoff helps by adding a loan to your credit reports for free. All right, this is very important. I mean, having said that, folks, we would still suggest opening a credit card, perhaps a secured credit card, if you're new to credit or have poor credit. And that's if it works for you. All right. And still, Kickoff is very helpful because speaking about the credit mix, it adds a loan to your credit history. So you are actually you are improving your credit score in the long run. That's wonderful. All right, folks. Thank you so much for your attention. I really appreciate it. What's the bottom line here? Overall, we think that Kickoff is quite a solid product. It lets you build credit better. It makes things very simple. And of course, it is free of charge. There is almost no reason not to use Kickoff if you're all looking to improve your credit. In other words, build credit or improve damaged credit. Of course, Kickoff is not the only tool you should use to boost your credit. You should consider secured credit cards, reporting rents, and credit repair if you have negative items on your credit reports. So by taking this balanced strategy, you'll be able to consistently improve your credit scores and enjoy a brighter financial future. So today's Kickoff review, I gave you a Kickoff overview, how a Kickoff credit line works, Kickoff fees and penalties, how to apply for a Kickoff credit line, alternatives to Kickoff, Kickoff versus self, other ways to build credit, and how Kickoff can benefit your credit score. Thank you so much for your attention, folks. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.